Welcome, and thank you for joining another installment of the LendSuite Premier Partnership Program webinar series. Today, we have a very exciting topic that we'll be covering. Instant bank verification has come a long way in the last 5 or 6 years. A lot of lenders and servicers are now relying heavily on instant bank verification in their funding and underwriting process. Today, we're going to be joined by 3 premier partners, Flinks, NinjaEdge, and Chirp, formerly Lendmate, to really discuss different ways we see lenders and servicers using instant bank verification to make their operation run smoother and more efficient. So I'm excited today to really dive into this instant bank verification products that we see, because I know they're extremely important, and I'm excited to see exactly what our partners are seeing from their customers, and hopefully they can pass some of that information on to you. Thank you. All right, everyone, I would like to welcome in our first premier partner today, a cutting-edge fintech company out of Montreal. Please welcome Omar and Joe from Flinks today. Welcome, gentlemen.
Hey, Mike. Nice to see you again.
Yeah, how's it going? Well, guys, let's go ahead and dive right in here. Tell me a little bit about Flinks.
Yeah, absolutely. So Flinks, we're a North American company. We're based out of Montreal, but we have offices across Canada and the US. We're an instant bank verification solution. We focus on the lending segment, where we help lenders verify customers' bank accounts, verify that customers have sufficient balance to afford to pay back a loan, and as well help them with the affordability analysis of customers.
Okay, that's awesome. So, I mean, you dove a little bit into it. Let's assume someone's brand new, has no idea. What is instant bank verification?
Yeah, so instant bank verification is pretty straightforward. It's just allowing your end users to consent to give you bank data. It's primarily done through a user interface where they allow a connection to a financial institution. It's been around for about 15 to 20 years or so. In the last 5 years or so, there's been some major advancements in that technology and being able to securely share that data and be able to get consistent access from that user. So at the core of it, it's just getting banking data in an easy, efficient way from that user.
So basically what you're saying, it's not screen scraping anymore. It's actually a connection.
For a lot of the major institutions in the US, it's through what we call OAuth, but yes, it's through direct login from that bank itself.
Well, that is awesome. So, I mean, I talk to a lot of lenders, and the number one thing I hear why they're not using instant bank verification, or the reason they want to do something else instead of instant bank verification, is it causes a lot of friction to the customer. It slows down the process. What do you guys see on the friction side, and what are some of the ways that you help lenders and customers overcome that friction?
Yeah. So I think this comes down to a couple of things. When lenders aren't super familiar with how instant verification works or what the benefits are, it's sometimes obviously like would scare them a bit, but the main points of how this actually accelerates the process from a loan application standpoint is the borrowers essentially are linking their bank accounts to allow the lender to see if they have sufficient balance to pay back the loan, if they have the sufficient income to pay back a loan, and if they can afford to take that loan out. So that actually helps lenders accelerate the decisioning for borrowers and create a better experience for the borrower ultimately. In terms of how we make it frictionless and how we get the customers to actually link their account and consent to this, we have a white label iframe that's embedded within the loan application on the website that is super sleek and gets the borrower very comfortable with the process. Also, because we're not screen scraping anymore, as Joe alluded to earlier, the OAuth connection between us and the larger FIs allows the customer to actually log into their bank account on the bank account's websites and share the data via API through Flinks to the lender directly. It's not screen scraping anymore. They're not sharing credentials with Flinks. They are just logging into their bank accounts seamlessly. So that's really the ways we remove friction.
Okay, that's awesome. That definitely clears up. So now we've been able to cover a little bit of, what instant bank verification is. And I guess the number one complaint that we hear, but, the people that do use instant bank verification now, they use it well. And, there's a lot of data they can get instant bank verification. So what I was thinking, to dive a little deeper into this is let's discuss, the different ways you see lenders using it and analyzing the data. And I think it's better if we do this in 3 sections. Well, a newer lender just starting off, maybe someone who's a little more advanced has been doing it for a while. And then I know there's some very sophisticated servicers and lenders in our space and how they're using it. So that way, they can see how they should start using it, maybe where they should be looking to graduate from. So, well, let's start out new. So if I'm a new lender, what should I be looking at in the IBV? How should I be using instant bank verification?
Yeah, so if we look at it from a martial arts analogy, the white belt way of doing so is really making sure that the customer is actually who they say they are, making sure that the customer actually has the income that they say they do, and it's not inflated, to protect essentially the lender from unaffordability analysis. So the customer would link the account. Flinks would be able to retrieve the account holder information, the account number and routing number, so the lender can collect on a monthly or bi-weekly basis, the account balance, and then transactions and income. So that's kind of the the white belt or elementary use of how a lender can get up and running very quickly with bank verification today.
Well, no, that's a great point. And how I've seen it used now, I've used it is very similar to what you said. One thing that I did really enjoy about instant bank verification is that you knew exactly when the paychecks were coming in and hitting the bank account. So that way you could make sure the loan agreement was set up properly. And as we know in the short-term lending industry, it's really important to be accurate in your pay dates and things of that nature. So that's great information to start. So, okay, let's get deeper, right? Okay, now we know the customer's getting paid. We know when they're getting paid. What's the next step? What are we doing next?
Yeah, so as you dive a little bit deeper into transactional data especially, so everything that Omar just said, it still counts when you're getting more advanced, but you're able to look more into that transactional data, into the recency of what that user is actually doing. So it's really understanding the cash flow that's coming in and out of that account, understanding their liabilities, their assets, the general risks associated. What we see for like a mid-size, a medium lender on that side is they'll still use manual underwriting in a lot of cases, but they will leverage the additional data on cash flow, on recency bias in order to better serve that client a lot quicker than they would if they were reviewing anything to do with additional statements, or if they were just going straight through as they would do today.
Well, that's some good insight there. So, all right, I'm the expert here. Actually, you're the expert, but I'm an expert lender, let's say. What am I using this data for? How am I taking it to the final and I guess most advanced step here?
Yeah, when we're talking about the most advanced use cases of this data, we're looking at a lot of automation and a lot of making sure that you're able to use the most up-to-date data in order to identify that borrower's affordability. So looking at their loan stacking risk, looking at their general credit risk and deeper credit risk, so things around NSF fees, general fees, any risk elements within that account that with bank statement data, you're able to verify within a couple of seconds. Directly out of that user. And you're also able to build things on top of that. So different routes, different waterfall solutions where you can actually automatically approve, decline, or send a user for a manual review, dependent upon what that user's data is actually telling you. You're not looking at stale credit bureau data. You're actually looking at direct, this is what that user has as of today. So you're able to make that decision a lot quicker. Most of our advanced clients aim to make that decision in under 5 seconds.
Well, that's key. Money is money's time here. So okay, well, I mean, I know you guys probably could talk about this, all day. You guys are the experts on it. So, but what I would like to do is wrap this up and just if you guys got any final points that you would like to let the lenders know, that'd be awesome.
Yeah, we appreciate the partnership with LendSuite. Obviously, lenders can, all the lenders on the LendSuite clients can activate us very quickly through the LMS. But yeah, Mike, this was awesome. Thank you so much for doing this. We really appreciate it.
Awesome. No, it is great. And you guys have been great partners, and we look forward, to growing. And again, I wish everyone a great day. And hopefully the lenders found this very valuable when it came to, the additional information that they were thinking about IBV or maybe looking to use IBV or already using IBV. So Awesome. Thank you, everybody. As we continue our conversation with instant bank verification, we're going to dive deeper in with Sean with NinjaEdge, another great fintech company that specializes in bank data. Sean, welcome to the webinar today.
Thanks for having me, Mike.
Well, Sean, real quick, give me a rundown. What exactly is NinjaEdge?
Sure. So NinjaEdge is an analytics platform. It combines consumer permission bank transactions with proprietary performance data for immediately actionable risk insights based on that same data set. We're building on a legacy of innovation, trying to drive forward digital lending, and our solutions are designed with lenders' needs in mind. We provide a simple 3-digit score that is easily incorporated into any lender's rules-based credit system, along with feature sets that allow you to surface insights into income and additional indebtedness that allow you to automate your decisioning process. And then lastly, our customers also have access to NinjaFetch, our proprietary smart routing product that chooses the best bank aggregator for every data request. And we'll talk about more why that's important later.
Oh, that is slightly different spin on things. So, Sean, I know there's a lot of data in IBV. So how do you guys look at the data in IBV?
Yeah, so for us, on its surface, working with bank transaction data can seem very straightforward. We're all familiar with how submitting a pay stub became a crucial step in verifications when digital lending was, a little bit more in its infancy. The reality is that bank data is messy. It's inconsistent. And there are so many different ways that applicants use an individual bank account as part of their day-to-day, month-to-month spending and financial activities. Our approach is to sort of harmonize those data streams because banks don't make it easy to use their data. So we want to be able to extract information from the accounts like pattern recognition and memo text processing. So we think that there's a lot more to be done with bank data than we're doing right now.
Okay, that's good to hear there. So the banks, they never like to make anything easy, that's for sure. So, okay. So I know there's a lot of good data in there. What are some of the concerns that you see from the data that a normal lender might not notice or might not understand?
Absolutely. So bank data is actually right now in this country, we have a closed banking ecosystem, and the data is being forced to sort of face two directions. Banks are incentivized to make their online banking as usable as possible to the everyday consumer, and that's a good thing. But in so doing, they can drop information from transaction memos, and they dull the ability to analyze and harmonize their data for back-end users like financial service providers. So we try and be a little bit more source agnostic by using our data normalization process so that we can actually extract the maximum value from every bank data stream that we get.
Okay, so that means lenders don't have to, dive too deep into bank statement. You guys are doing a pretty good job of bringing that information to them, which is definitely beneficial. So, all right, let's dive a little bit back into, how a lender who is trying to build a better portfolio, how are they going to use the data that is in there? And how do you guys recommend they use the data that they find?
Absolutely. So there are 2 or 3 really important ways to start using the data right away. One of this is automation. So we use machine learning algorithms and pattern recognition because we're looking at billions of transactions and then saying, this is how you identify income. This is how you identify recurring expenditures. We're constantly updating our list of lenders and other debtors that we see. So we're able to identify that additional indebtedness that you're stacking your loan up against, if you are. And then the other piece is scoring, right? On top of the normalization and memo matching, the features allow us to create a scoring engine. So we have over 2.5 million application data. We also have 410,000 performance accounts. And by using that performance data lake, we can actually extract the relationship between account features and eventual performance. And then we turn that into a 3-digit score that is very familiar so our customers have something to use.
Okay. So, and then they use that score that would provide them predictive performance. Is that the ultimate goal?
That's correct. So that score is designed to give you confidence based on the ability to repay and their behaviors that we see in their banking data on the early term defaults. So we're doing predictive scoring for default risk in the first year.
Okay. And then I guess finally, just you touched on a little bit earlier that you guys can determine what IBV is the best for a certain bank. And then I guess you guys use multiple IBV providers to get the data?
We do actually, yeah. So we actually have some really good partnerships with other bank aggregators in the LendSuite ecosystem. We also have a couple that are not as well known. And a big thing for us is data density. For a lot of the legacy providers or the original efforts at IBV, density wasn't a huge concern. If they got 2 weeks or 30 days worth of data and you manually reviewed for what you thought was a pay stub, that was a really good starting point. But for us, the ideal account has 1 to 2 years of history. They pay all their bills out of the same account they get their income into. A lender could really get a full picture of how they handle the money they have. Unfortunately, that's not really how reality is. So what we have to do is we have to layer on the best, most dense data pool that we can get for that account as quickly as possible so that we can process the account and give back relevant information to lenders that they can use right away so that they know sometimes maybe you need to connect an additional account, or also in the smart routing algorithm, whether or not there is a quality connection available.
Okay, well that's some great information there. So I guess to wrap up, the very, very interesting conversation here. What would you want the lender to leave with from this webinar about instant bank verification?
I think I would say two main things. One, that we are still in the early days of what you could do with bank data. We talk to a lot of lenders that tell us they're using bank data, and that excites us because that's our industry. But we think that there is a lot farther to go with the predictive analytics you can do on such a dense data set. So for us, we want people to know that if you've got value today, imagine the value you can get in a year or 2 years when you're using the right tools, including some of the people on the webinar. And then I guess the second piece would be is that when you look at your IBV data, there's two really important pieces. There's access and answers. And I think you have to have both to get the full value from instant bank verification.
No, that is a great final push there. Again, Sean, I appreciate you joining. And Sean did mention a little bit of the LendSuite universe. Right now, they are currently integrated with Infinity Anticombi, and Epic integration is currently underway. So, Sean, I appreciate your time today. Some great insight that, hopefully the lenders will continue to use IBV, and if not, really consider, instant bank verification in their process. We've got some great information so far. A lot of it has been dealing with the front end and acquisition. But to continue our conversation, we got Robert Wheeler with Chirp, going to be talking a little bit different use of IBV. Robert, welcome to the call today.
Morning, Mike. How are you doing?
Morning. How are you doing?
Very good.
So, Robert, let's dive right in. Tell me a little bit about Chirp.
All right. Chirp is made up of me and my partner, Jason. We were both military vets, and we came on the scene about 5 years ago. Was looking at that there wasn't really a lot of vendors that were sticking with the lender after the loan was made. There's lots of smart folks before that. You have a lot of decisioning tools. We have great competitors, very intelligent. They keep us on our toes. So, our thing was to be a true open banking provider. What could we do to offer a lender that would improve the relationship between the consumer and the lender? And, I want to speak about our coverage and kind of what we do on the front end. We have 12 different aggregators that we could choose from. This allows us to kind of offer lenders a bank verification at a very low price. Now we have 12 people that are competing for their business. That also allows us to have great coverage through U.S. and Canada. We got probably a little over 15,000 financial institutions, total about 50,000 connections within those. We've done things from your traditional banks, credit unions. We've went out to the neobanks such as Chime, Vero. We can even connect your Cash App, Venmo, PayPal. Any of those financial apps are not an issue. So with that, you'll get your standard bank verification. You'll get some analytics with that. You'll get a monthly average. You'll get a daily average of income. You'll get some payroll insights such as average payroll, average monthly payroll. And we even do a cash flow analysis. We give the lender the ability to see if the customer can actually pay back the loan. You'll show some money coming in, money coming out, how much funds are left to make that loan payment. So that's generally what we do. That's kind of a good oversight there.
Okay. No, that's definitely a good oversight at Chirp. Now, like I sort of prefaced in earlier to start this, is that, we've been dealing with a lot of acquisition. I know you guys deal a lot with acquisition, but you mentioned a little bit that you stay with the lender, after the loan is originated. So I think that's really the power of a good, powerful tool Chirp has. So you want to dive in a little bit of exactly what the Chirp is and what it does?
Yes, Mike, thank you. So one of the things that we noticed was that with our ability to stay connected, what can we do to help out the lender, once the loan is made? Their consumers are going to end up in one of two places. They're either going to make all their payments or they're going to default on some, make some, etc. So what can we do by staying connected to the bank? What services can we offer that lender, and that will help him with his or her with their relationship with the consumer? And we have the ability to assist lenders when their consumers go in default, generally adding a little bit of intelligence to the payment processing there. So right now we have the ability to provide what's called a pre-deposit alert, meaning that we just released the ability to notify the lender when their consumer gets a deposit. We can even tell them prior to that deposit actually showing up on their bank statement. So this will allow a lender to kind of avoid having unsuccessful payment attempts and only collecting money when money's there. On the flip side of that, you'll have your good paying customers. And when those good paying customers are low on funds, that lender will be the first one to know about it. So we process those to what's called our low balance alerts. So as soon as your good paying customer gets low on funds, Chirp notifies you, you take action. You can send the customer an email, a text, pick up the phone and give them a call. So you want to keep those good paying customers around. So Chirp low balance alerts allows that to happen. I kind of want to lead the deposit alerts a little bit. We work very well with payment processors. They have the ability to see all the activities through the Visa rails, the MasterCard rails. We have the ability to come in from the open banking side and kind of work together to help out to eliminate NSF charges. We don't want consumers getting unnecessary NSF charges. We really want lenders to only try and collect money when there's money there versus a bunch of unsuccessful payment attempts. So through a lot of automation, this has really helped out improving collections. We've got great feedback from lots of lenders who have integrated this. So, we're super happy with the results, and we're just, always appreciate any feedback that we get from our clients.
Okay, no, that's some great intel. I know some lenders using it on the collection side, but you just mentioned a very interesting side is, if one of your good returning customers that maybe paid off a few months ago is now in the negative, it's a perfect time to drop in an email or a phone call, regarding, coming back and getting their loan to help out with their short-term cash needs. So that is awesome. So, okay, that's a new spin on it. So Robert, Chirp's done a lot over the last few years. Where do you see Chirp going? What's the near future look like for Chirp?
We really want to get more into the automation as time goes on. A lot of lenders are looking to go that route, and that's why we really teamed up a lot with several payment processors in the industry where, just an example of a customer, when you run an ACH on, say, a Friday, and you comes back return for R01, which means insufficient funds, that'll automatically kick on your Chirp your Chirp deposit alert. So therefore, as a lender and as an LMS, you kind of sit back and wait for Chirp to let you know the next time that consumer has enough money to cover that missed payment. Once that money comes in, Chirp will let the LMS know. LMS can trigger an automated payment, and you've really automated your collections from that standpoint. On the flip side, from the good paying customers, what you have is where a customer may have made 2, 3, 4 payments on time. They get down to their last 10 or 15 bucks before payday. This is a great customer, and truly a lender's most valuable asset is a good paying customer. So to keep those customers around, when they know that they're low on funds, we let the LMS know. The LMS can send an automated message to the consumer to let them know that money is available. It's that they need to borrow more, since they have a great track record with that lender. So this allows a lot of automation from the collection side. allows automation from the funding side, and honestly keeps them in compliance from not having too many payment attempts or unnecessary payment attempts. So that's what we really try and do. That really overall can benefit the relationship between the consumer and the lender, as the lender won't be trying to take money that the consumer may not have. So just kind of improves everything. So far, we've had a lot of good luck with everything that we've been doing.
Okay, Robert, I think that's some great insight. And, I appreciate you taking some time out of your day to jump on a call with us today and, really, dive in a little bit more what Chirp is. So again, thank you for joining, Robert. And,
yes, sir.
I hope everyone noticed that, definitely a different spin on the IBV. IBV is not just pre-acquisition, underwriting, funding loan. There's a lot of that data can be used down the road too. So again, thank you, Chirp, for joining today's call.
Yes, sir. Thank you.
The goal of the LendSuite webinar series is to provide you with some very valuable information and introduce you to some partners that you might not have known about before or used. And I think this webinar did exactly that. If it was Flinks using the upfront data and, pulling IBV to NinjaEdge, really diving in and producing a score to help you out with predictability, or Chirp, building the collection side of things to keep you focused on your customer's activity. I think all of this is extremely important information when you are looking to optimize your lending operation. IBV is an extremely important part to a lot of lenders and servicers. I do know that there is some friction involved for the customer to get it signed up, but what I've seen from the data is once they do sign up, the likelihood to fund is higher, and you can make faster decisions. You can get more money out on the street to the right customers better. So if you get the opportunity, I would definitely check out, some of our preferred partner IBVs. Again, today we are joined by Flinks, NinjaEdge, and Chirp, all of which are partners of the LendSuite organization, and we look forward to working with them in the future.